Let's get to our closing bell exchange right now. What an interesting day this is. We've got Larry Glazer from Mayflower Advisors joining us today.
This has really been a market of contradictions, and today is no exception to that. Look, you had the market that's been willing to overlook things like mixed economic data, great ADP, but mixed data in other areas. It's been a market that's willing to overlook geopolitical turmoil, dysfunction in Washington, an inability to get policy done. But at the same time, the market believes that Trump has their back. They believe that he is pro-business. He's engaged in a dialogue with the business community, with labor, and as a result, the market's voted with his feet, and it's been incredibly resilient. But at the end of the day, the markets aren't crazy, right? And we see investors increasingly moving money overseas, starting to migrate money out. They recognize that unsustainably high valuations are not realistic, and you can't maintain sentiment unless you have earnings to back it up. So you don't see insider buying here. So I think that's what's really important. And instead of focusing on the Fed or focusing on Friday's jobs report, we need to focus on earnings if we're going to keep the market and move it higher. That's what's critical here, and that's what's missing.
As far as Larry, everybody agrees with Larry. Dysfunction is the default of Washington. It's not taking anything away from the markets. When you get less defaults, you're actually going to give the markets a present, and we haven't seen presents like that in a while. We can hope. But as far as the numbers today, I thought ADP was pretty good, but you did give up a chunk on our last month from 298 to, I believe it was 245. I think that we are looking at a long-term growth picture that really hasn't changed much. We have the feeling that things can do better. We may have a landscape where things can do better, but most market traders that I talk to say the real confidence is they don't think it's going to get any worse. Is that half empty? I guess, but then your wallet's more than half full if you invested in it.
Larry, you brought some picks here. I just wanted to briefly mention them. You talked about looking outside the U.S., and I see Mexico is one of the things you'd be a buyer of here.
That's right. Well, listen, Kelly, that's sort of the anti-Trump trade. It's interesting. Maybe there never was a Trump trade. Maybe the Trump trade was simply better economic data, and people got so wrapped up that they started taking money out of places, and they created cheaper valuations. So at the end of the day, valuations and fundamentals have never mattered more in the last 8 years than they do today. So we want to buy what is cheapest. And, you know, it's in no one's best interest to have weak trading partners on either side of our country. Mexico got really, really cheap a few months ago. We've been talking about some of these stocks on your network for a while, and I think valuations are still attractive outside of the U.S., maybe a little bit less so today, but there's still compelling opportunities. So investors want to focus on what's cheap and not focus on policy-driven decisions right now.
And I'd like to just ask Larry one question.
Very quickly.
With earnings looking up 9% for the quarter, year from year, with revenue looking up 7% for the quarter, year for year, if we do get a 20% corporate tax rate, which might be a pipe dream, but if we do, that tax on another 7.5% for next year.
Good point.
Maybe these valuations aren't so crazy.
It's a question of when those tax cuts come. And if they come in 2018 or if they get delayed, then the market's ahead of itself. Look, the biggest beneficiary of repatriation of capital is someone like Apple with $250 billion overseas. They get to bring it back at a cheap level. Maybe that's why Apple is up 25+% this year, because they believe that these tax policies are going to happen. They just don't know when. So I don't deny that the market believes tax reform is happening and they believe it's coming. They just don't know when, so they're going to take a pause until they have more evidence about timing.
But Larry, Apple doesn't pay the headline rate anyway. It should be other companies, don't you think? They never pay the effective rate.
They need to share the wealth a little bit more and empty the coffers and, you know, pay for schools in this country. And I think bringing some of that money back, whatever money comes back under this policy, is going to help support infrastructure. It's going to help support the middle class and his family.
As long as they don't let them all buy their stock back. You know, President Trump, are you listening? Let them repatriate and buy their stock back.
I totally agree.
All right.
It was all about the iPhone.
Couldn't agree with you more.
This is why we call it the exchange. That's what just happened there. Good stuff, guys. Thank you.